Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, January 12th. Well, we're back nice and refreshed after having a good break over the holiday season, and here we've seen an interesting market, with the market coming off the highs from the 2093 level for the S&P 500 daily chart here, and trading down through both the Kijun-sen and the Tenkan-sen indicator, and testing down to the round number level of support around the 2000 level on the 6th of January. The market then attempted to rally outside of the Ichimoku cloud, finding resistance at the top of the cloud, but broke out in a fairly strong bullish manner and breaching a zone of previous support and resistance highlighted by this yellow area. But in the last couple of trading days, we've seen the sellers re-enter the market quite strongly with these two fairly large black body candles, and today this candle has changed the trend in the first time frame again back to the downside. So it's suggesting that even though we've seen some buying coming into the market over the last couple of days, the sellers do seem to be the stronger party over the last couple of weeks over the holiday period, and with the sellers taking control of this current candle and closing back within the Ichimoku cloud, it does suggest potential for the market to trade back to lower levels. Now we do have potential support at the 2019 level, and then certainly down at the round number 2000 if we do see the market come off again. Resistance can be quite strong at the 2040 level and just above there at the Ichimoku cloud, so at the top of the cloud. So the buyers are going to have to be strong enough to change this trend in all three time frames back to the upside once again, whereas we now have a bearish market in the fast and medium term time frames and a neutral market in the longer term time frame. The bearishness in the short-term timeframes is now supported by the Chica span being below the corresponding price action. So we've seen a change of sentiment and momentum in that longer-term timeframe, as shown by the Chica span moving above and below the price action over the last couple of trading weeks. In terms of the Fibonacci extension, we're examining the relationship of this new first time frame downtrend to the previous time, the immediate previous time that the market was trending down in the first time frame, and here we've seen the market find some support around that 38.2% level, failing to close beyond there, breaching that area, but some buying coming in around that level. So there is a possibility of seeing some buying coming into this market, but with the sellers being in control of this candle, fairly large black body candle, strong downside momentum in net terms, sellers in control and showing strong commitment, I doubt that that level will hold up for tomorrow, and there's a very good possibility of the market testing at least to the 50% level and even perhaps to the 61.8% level. The 50% level is at 2014, and the 61.8% level corresponds roughly with that round number 2000 trading at 2002. There has been something of a pattern begin to develop in this market, and some may be tempted to call this a complex head and shoulders pattern, a very large left shoulder, the head, and the right shoulder here that's just forming. We've drawn a neckline across here between the shoulders and the head, and we have a potential target. Now that the market is trading down in this first time frame, we have formed that right shoulder, and we will need to see the market close beyond the neckline that's been able to be drawn now. If we see the breakout tomorrow, we'll have a target down around the 1892 level, which probably wouldn't be realistic if we see that breakout, because if we do see the market close beyond the neckline, we're likely to see strong support coming in at the bottom of the Ichimoku cloud. Now, the problem with this potential head and shoulders pattern is that it's just not realistic in the size of the head and shoulders pattern compared to this trend leading into it. And if we look at the neckline projecting it back here, it really does intersect very close to the origination of that trend in that second term time frame. And it just looks way out of proportion. This very large left shoulder is way too big. The length of development in time over this long period of time compared to the depth of the trend leading into this pattern is not realistic. So I've really got a lot of doubt about this, and I really wouldn't call this a head and shoulders pattern. And that's mainly because of the proportion here. It just looks way out of whack. Now moving to the bands with the S&P 500, and here we see the market continuing to trade within the bands. We have been trading within the bands for quite some time over the holiday period in the new year. Previously we were trading above the band. We had very unconvincing price activity above the band, not giving us a lot of confidence in the continuation of the trend to the upside. Then strong selling coming in and the market breaking out in a fairly bearish manner to the downside. But if you recall, we like to see that strong follow through to give us confirmation of that initiation of that new trend, and we didn't see that. So we have the market really acting in quite an indecisive manner, and these bands are pointing sideways, so really highlighting a lack of direction. Now if we do see this first time frame downtrend continue, we're likely to find some strong support coming in at the bottom band at 2010. So that's an area that we should be watching very closely for support, and also watching very closely for a bearish breakout. If we see that bearish breakout and strong bearish follow through, we could see the downtrend further develop to the downside. But at the moment we're trading within the bands, meaning that the market is really it's negative by trading below the middle bands of the bands, but not strongly negative. Moving next to the Dow 30, and something of a different type of candle here, more of a spinning top indecisive type candle that we've seen here for the Dow 30 compared to the S&P, and we have the market still trading above the Ichimoku cloud, so a very, very different market. And throughout the holiday period we did see that strong selling coming in. We saw this very indecisive and weak trading as the market was establishing these new highs about the 18,100 level, selling off to find support within the top of the cloud and bouncing off in a strong way, finding support at the top of the cloud today and suggesting a possibility of a change of trend back to the upside, even though the sellers have closed with control. Now this bullishness, however, that we're seeing in that longer term time frame is not supported by the Chiker span. It suggests that there is downside momentum, so there is a possibility of the market continuing to trade lower and trade within the Ichimoku cloud. So we should be watching this area here around the lows, roughly about 17,560, and the top of the Ichimoku cloud quite closely. Moving next to the Nasdaq 100, and strong selling in this market, very large black body candle extending the size of the black body from the previous day's trading. And also with the market trading down towards the lows, we have the sellers taking very strong control and showing strong commitment in this market. Previously we had the market trading outside of the Ichimoku cloud and the sellers coming into the market to close within the cloud, and today we've seen the market breach the previous support from the last candle around the Kijun-sen and the Tengen-sen, changing the sentiment in the medium and fast term time frames from just slightly bullish to neutral to fairly strongly negative by closing down below those indicators. We also have a neutral market in big picture terms, and that negativity in the faster term timeframes is supported by the Chiker span being below the corresponding price action. Now also today we saw the market breach and close beyond the small window that was opened up a few days ago, and we had a gap up, and windows in terms of candlesticks tend to be very strong areas of support and resistance, and we've taken out that area, breached that area in a strong manner and closed beyond there in a strong bearish manner, and it does suggest that the sellers are quite strong in the market, and there is a possibility of the market continuing to trend down to lower levels. Now potential support at 4147, and beyond there we have fairly strong support around the 4089 level. Any rally from this region may find strong resistance at the Kijun-sen and Tengen-sen, trading roughly about the 4207, 4208 level and around the 4200 level, and then above there around the top of the Ichimoku cloud at about 4245. Now just looking at the Nasdaq 100 with the bands here, and here we see the bottom band holding as support for today's trading, the market attempting to rally through the middle of the bands, a lack of follow through once we breached that area, the market trading through to the top of the bands and the sellers coming back in today strongly. This bottom band will be very important for this market. If we see a strong bearish breakout and then strong follow through, and then a breach of this important support area, roughly about this 4087, 4088 level, we certainly could see the market trend down lower. Moving next to the Russell 2000, and in this market we see the Market trading lower today, making a lower high and a lower low, but a candle where we see a fairly large shadow on the bottom, quite different than the other equities markets that we've looked at. And it does suggest that the sellers have lost control of this market. They had control for the previous day's trading by closing down towards the low, and today by closing just around the midpoint level, neither party has taken control, and it does set the market up for a change of trend to the upside. So we will be looking for a potential higher high and a higher low. Now for today's trading, we do have a black body candle, so it does suggest that net momentum is still with the sellers, but that momentum is weaker than it was for the previous day's trading, as evidenced by the smaller size of the black body of this candle. We also saw a resistance coming in at the Tenkan-sen indicator, trading at 1187, and then support coming in down below the Kijun-sen, trading roughly about 1178, 1180. Also, a window was opened up over the last couple of days, and the market breached that level, closed the window, but failed to close down below there. So it suggests the window may still be in play and may continue to provide some support for this market. In terms of the long-term trend, we are still trading above the Ichimoku cloud, so we do have a bullish market in the longer-term time frame and in the medium-term time frame by trading just above the Kijun-sen indicator, but bearish in that faster-term time frame by trading below the Tenkan-sen. And we'd like to see the market close in a strong bullish manner up above there if we are going to see the market trade to higher levels. Let's just quickly take a look at some stocks here, and looking first at Google. GOOG is the code, and on the bottom left hand corner we have the weekly Ichimoku chart, and for the prior week we saw a strong bearish close down below the Ichimoku cloud, giving us a bearish market in the longer term time frame, as well as the daily and weekly, or the medium and short term time frame, by trading below the Kijun-sen and the Tenkan-sen. This negativity is supported by the Chica span being below the corresponding price action. And here we have a closer look, and the Chica span is below the corresponding price action, and this strong bearish close down below the Ichimoku cloud does suggest the potential for the market to trade to lower levels, but we do have strong support around the swing low, roughly about the 490 region, and we are seeing support coming in with this current candle that is forming for this week. One thing to be aware of is that we have had the breakout down below a flat part of the cloud, and we can have false breakouts from the flat parts of the cloud. So not a lot of confidence in the market continuing to develop to the downside. What I'd like to see is the market close down below this support around this swing low and close in a strong bearish manner down below there, and that would give us a bit more confidence in the breakout to the downside. Looking at the relative performance to the S&P 500, the Google has been strongly underperforming the S&P 500 for quite some time, but trading down below that bottom band, and it does suggest that there is a good likelihood of that underperformance to the S&P to continue. So probably a good stock that has been a good short. And looking at volatility, we have volatility moving higher off a cyclical low and continuing to do so. So it does suggest that there still is further potential in downside for Google. And just looking at the lower right hand corner, we see the bands here on the weekly charts, and we've had a bearish breakout down below the lower band, and we want to see that bearish follow through to confirm the negativity. Quite a bit of trading down below the lower band for some time, not strong trading, some weak trading, and a rally back to within the bands, but not trading significantly to within the bands, and it does suggest that we have in weekly on the weekly charts a very weak stock here in terms of Google. On the daily chart, top left-hand corner, Ichimoku continuing to trade below each of the Ichimoku charts, suggesting that we have a bearish market in all three timeframes. Something of a small hammer type pattern here today, and suggesting a possibility of a rally. But if we do see the market rally, we could see strong support coming in around the Kijun-sen and the Tenkan-sen at about the 510 and 512 level. Strong resistance coming in about 510 and 512 level. And on the top right hand corner, the bands trading down below the lower bands, not in a strongly bearish manner at the moment. A possible rally could see the market test to the the lower band at 501 and find some strong resistance around that region. Next we'll take a look at Tesla. TSLA is the code, and lower left hand corner is the Ichimoku chart, and we see the market testing just within the Ichimoku cloud. So change of sentiment in that longer term time frame from bullish to negative. And at the moment the market trading within the cloud there on this current candle on the weekly chart that is forming. We have seen the market trading down below both the Kijun-sen and Tenkan-sen for roughly about 2 months almost, and the market attempting to rally through the Tenkan-sen indicator, but especially in the last couple of weeks the Tenkan-sen holding as a resistance for this market. So important resistance at the Tenkan-sen, which trades at 226. If the market does attempt to rally from here on this current candle, we could find some resistance at the top of the Ichimoku cloud, which trades roughly about that 215 region. But by the same token, if we do see the market continue to sell off, we're looking at strong support coming at the bottom of the Ichimoku cloud, roughly about that 190 area. Strongly underperforming the overall market in terms of relative strength to the S&P by trading down below the lower bands here. So a market that, or a stock that certainly is or has been a good shorting one that's adding more, it's adding benefit to a portfolio by underperforming the S&P 500. In terms of the bands in the lower right hand corner, we see the market continuing to trade down outside of the lower band and trading in a bearish manner for the previous week. The lower band holding as resistance for the 2 weeks prior to that, and then the sell-off coming. So we have a very strong negative bias in this market, and we want to see follow through and a breach down below that previous swing low around 190, 179 to confirm the negativity. And if we see the market breach that area in a strongly bearish manner and then test down to this 177.80 178 region, we could see the market continue to trade lower down through there. On the daily charts, a fairly strong negative market trading below each of the Ichimoku indicators in the top left hand corner, and with the bands here we see something of a squeeze going on. So a change of trending activity here, previously trading in a strong bearish manner below the lower band, rallying to the upper band, finding resistance, then finding support at the lower band, rallying to find resistance at the middle of the bands, and now breaching that lower band on a candle that seems to be something of a hammer type pattern. So potential for the market to rally, but we should be watching that lower band very closely to hold as resistance if we do see the market rally. So some important trading activity coming up, but the daily chart here on the bands here is not highlighting any significant strength. We do have a strong negative sentiment by trading below the lower bands, but we have seen the sellers lose control on this current candle.